Is this the beginning of the end of the US dollar? Because something major is shifting. And it's not just opinion anymore. It's in the numbers. It's in the reserves. You can see it on the FX tape. Currencies just don't crash overnight. They erode slowly, quietly, until the floor just gives way. And right now, the dollar is bleeding strength. Economically, politically, and psychologically, no one is really talking about it enough. So I will. Hey, I'm Seth Moran. I spent the last 20 years in finance, retiring as a managing director in 2024. And today, I'm breaking down why the dollar is getting smacked, who's dumping treasuries, how global reserves are changing, and what it means for your money, especially if it's in USD. And then I'll give you the 3 things that you can do right now to protect yourself. You want proof? Let's look at the scoreboard. The US dollar index, or DXY, is down over 8.3% year to date. Year on year, the dollar fell 5 to 6% against the British pound and around 3% against the euro. It's up 15% year over year against the yen, but Japan's still running deep negative real rates and standing on the sidelines while the yen gets smoked with the Finmen constantly watching, which is a legitimate headline that comes out in Tokyo every time the yen moves a figure or two. The BOJ hasn't intervened directly yet, but you have to think the market's already pricing in that they might. And the Chinese yuan, well, it hit 7.3 against the dollar, the weakest since 2007, before China stepped in to stop the bloodletting. So what's the main thing to extrapolate from all of that? Well, it means that the global confidence in the US dollar is slipping. And it's not that other currencies are better, it's just that the US dollar is no longer untouchable. Well, reason 1, weaponization of the dollar. When the US froze $300 billion in Russian central bank assets, the global south took note. China, India, Saudi Arabia, they all said, if they can do that to Russia, they can do that to us. BRICS nations are openly calling for a new reserve system. If you don't know, everyone in finance, they just love an acronym. But BRICS stands for Brazil, Russia, India, China, and South Africa. But there are a bunch more now, so I'll throw that up on the screen. But the BRICS nations are proactively moving away from dollarization, and it's picking up steam. And not to mention, some of our allies are actually playing along. India is buying oil from Russia in rupees. China and Brazil are setting up trade in yuan. France just bought LNG from China, and they paid in yuan. That would have been unthinkable 10 years ago. The dollar is becoming politically radioactive. Reason 2, central banks are ditching the dollar. Global reserves held in USD just dropped to like 57.8%. That's a 30-year low. It used to be over 70% in the early 2000s. That's a transformative shift. This isn't de-dollarization by revolution, it's death by 1,000 reallocations. Again, even allies are diversifying. The rise of non-traditional reserve currencies, Canadian dollar, Aussie dollar, gold, shows the world is hedging its exposure. I mean, gold is up 41% in the past 12 months and 23% in 2025 alone. That's incredible. Reason 3, China and Japan are dumping treasuries. China has sold over $300 billion in treasuries since its peak, down 40% from its high. In the last 12 months alone, it dumped another $57 billion. Japan, the largest US creditor, is down $250 billion from its 2021 peak. They're not waiting for a blowout, they're quietly just heading for the exits. How selling treasuries crushes the dollar. When foreign central banks sell treasuries, it does 2 things. It pushes yields up, which means treasuries drop, yields spike. We saw this in 2023, 2024 when the 10-year hit 5%, the highest it's been since 2007. It weakens the dollar because they're selling treasuries and converting those dollars into local currencies or diversifying into assets like gold or non-USD denominated bonds. That's real capital flow, and it matters. Japan did this to boost the yen. China's doing it to stabilize the yuan. And it's not theory, it's actually happening. And when foreign buyers pull back, it leaves the US relying on private speculators, not sovereign trust, which is kind of nuts. One thing I do think is interesting, and it's likely more on the individual side and less so from the government perspective, is that there is most likely rotation out of US treasuries and into Bitcoin and other cryptocurrencies. Can you believe that Bitcoin and crypto is seen by some as a safer alternative to US treasuries? I mean, I agree with that sentiment, at least right now I do. But to say it out loud, it's absolutely crazy what it means for you. So what do you do now? Well, own hard assets, gold, silver, real estate. I mean, gold hit $3,200 for a reason. I mean, though it's not a hard asset, I would also throw Bitcoin into the mix because of its scarcity and its capacity to store value. Diversify internationally. Look into emerging market currencies, foreign ETFs, or currency hedge assets. I mean, I did an entire video on my 10 favorite international ETFs. I'll put it on the screen. Check it out. I'll also put a link in the description. Watch your tail risk. If a major reserve holder dumps treasuries fast, yields will spike, the dollar tanks, and risk assets get smoked. It's hard to visualize, right? But let me just give you an example and walk you through it simply. Let's say China, holding $760 billion of US treasuries, decides to dump a big chunk overnight. Well, what's going to happen? Well, yields spike, right? Massive selling drives treasury prices down. Lower prices equals higher yields. Bond markets panic, and the cost of borrowing for everyone rises. The dollar tanks. China sells treasuries, gets USD, converts it to yuan, or buys gold. That means flooding the FX market with dollars, meaning the US dollar weakens. Risk assets, they get smoked. Rising yields equals pressure on growth stocks, tech, real estate. A weaker dollar equals global capital volatility. Investors start de-risking. Stocks fall, volatility surges. This chain reaction is what we call tail risk. But you don't need to panic, but you need to have a plan to reposition or hedge your assets. So, are we witnessing the end of the US dollar? Well, not tomorrow, but the decline is happening in slow motion. USD down 8.3% this year, reserve share under 58%, foreign buyers backing away, BRICS forming their own currency blocks. This isn't a collapse, this is corrosion. And if you're not paying attention and diversifying, your portfolio is going to corrode along with it. So stay alert, stay invested, and think global. Remember, kindness is the rent we pay on earth, so do something nice for someone. I'm Seth, and I'll see you in the next one.